Welcome back to Market on Close. I'm Tom White. It's time to bring in our next guest. It's going to be Dory Wiley, CEO of Commerce Street Holdings. Welcome to the show, Dory.
Great to see you today.
All right, so bank earnings, calming markets here a little bit, Dory. What was your takeaway, especially from the JPM report?
Well, glad to see it, aren't you? The market kind of needs that. Banks have been a fear trade since 2008, and obviously the big gorilla is JPMorgan. So we needed a good report from them, and we got one across the board. Net interest income, investment banking's up 10%, equity trading up 48%, loan growth up, even deposits up, revenues up. So, and then of course earnings were a nice pop above, and then the even better one for me, as a downside risk manager, is provisions for credit losses were up as a safety precaution. So we like that. The tangible equity reported at 7.8%, which is way higher than it was in March of 23, which is closer to 5%. Bank looks very safe and sound. I'm not sure where all the fears of the recession are from.
Yeah, Dory, when you take a look at it, it seems like Jamie Dimon has almost been a fearmonger over the last couple of years that he thinks a deterioration, in the economy is coming. We haven't seen it yet. We're starting to see some cracks from the consumer side of it with sentiment and confidence numbers at this point. Do you believe the banks are a good barometer for what's going on in the overall economy? They have all the data. They're right there in the front lines there, Dory. And we're not seeing any cracks out of them. So, recession fears maybe should go away?
Well, the cracks are there.
Yeah. We
see them in our clients, in the bank clients, and across the board. But they're not big cracks. And in the past, when you came into these downturns, say like 2008, if you're doing 90% lending on, future values of loans and buildings and running with a 5% tangible capital ratio, there's too much leverage, too much risk, right? Well, banks aren't doing that kind of lending. They're doing 50, 60% LTVs, 70 at the most, and they're running high capital ratios. And so they've got room to work on their balance sheet, which is important. So when we're helping banks with problem loans, they're in one-offs. They're not in mass amounts. Mm-hmm. And when they become mass amounts, that's where there's trouble. So I think when Jamie's saying, hey, I'm worried about this, that, and they're seeing them in ones and twos. But what he's underestimating is the power of his balance sheet. His balance sheet is really strong, as are the rest of the industry. And that's the plumbing and the wiring, right? So when we're afraid of a recession, we're not really afraid of a recession. It's a few quarters of a downturn. What we're afraid of is a crash. And I just don't see an economic crash. Sure, we had a market correction, I guess, if you call it, much like 2018. But we haven't had a crash, and I don't see one coming.
When you look at the other side of it, maybe the regional side, small caps have been taking it on the chin. Financial is really a big component there. You look at the fortress balance sheet of a JPMorgan. Morgan Stanley's report was pretty good today. Wells Fargo had some charges in there, but are the regional banks more susceptible? Because they're more regionally focused, where they're going to have some issues maybe, and the big major money center banks and investment banks are going to be okay.
Well, in some ways, it kind of depends on your outlook. Let's say you're afraid of tariffs, right? Well, the least exposed among the big banks to tariffs would be Wells Fargo. The most exposed would be Citibank, and then the investment banks, Morgan Stanley, Goldman Sachs, and then JPMorgan on down. But when you get to these regional banks, they have even less exposure, right? A lot more of a domestic focus. When you get to these community banks, say Texas community banks or California or wherever, there's not a whole lot of international exposure there. And yet those banks have sold off just as much, if not more, in the sell-off in this April. And it's a great time to pick them up. You can pick up banks close to tangible book value and anywhere from 9 to 12 times forward earnings. Yeah,
that's a great point. And remember, when new administration came in, deregulation, this was going to help domestic companies here, and we just haven't seen that turnaround yet. So that's a good point here. Wanted to kind of get into one of your stock calls, and we saw a big, massive, dump in the Mag 7 names. Some of these solid, tech companies. Nvidia got below $90 a share this week, Dory, and I'm just sitting there scratching my head because everybody called it expensive when it was trading $150. And then you look at their sales, you look at their earnings, you look at their growth. I know it's slowing, but it's still spectacular. But it seemed like some buyers came in this week in Nvidia.
Well, it's amazing how human every one of us is, right?
Yeah.
I mean, I'm not going to lie, that stock comes crashing down in the low 90s and stuff. And I test my resolve, and I have to go, wait a minute, look at it. What's its exposure to tariffs? It's less than 5%. Some say less than 2%. And you're like, okay, I would kill to have this stock. It's on stale. But yet you will second guess yourself out of fear.
Yeah.
But it's nice to step up if you have a predetermined discipline. And I think that discipline comes not only from that stock, and how strong it is, and as far as earnings and returns and position in the marketplace, but confidence in history a little bit. So when you look at the VIX, anytime it gets over 40, right?
Mm-hmm.
Well, there's a 90% probability you're going to make money in 3 years, 80% in a year. And those returns range in a 3-year period, 50 to 80%. Those are great odds. That's just from throwing a dart. So when you can step into a good quality stock that has a higher beta, higher sensitivity, the fundamentals of a Nvidia, and we can kind of corner and bracket some of the exposure on the tariff side, makes it pretty easy to say yes.
Yeah, be greedy when everybody's fearful at this point. You have to go back to that old trading adage. All right, great discussion, Dory. Have a great weekend.
You bet. Have a good day. Bye-bye.
All right, it's Dory Wiley, Commerce Street Holdings.